Just want to make sure, can everybody hear me okay? Great, yep. So thank you very much. I think just to finish off this fantastic event, this is an opportunity to hopefully give you exposure to something a little bit different. Digital assets, tokenization, what that means for the wealth management industry globally, and really to try and give you a sense of an emerging trend that's of definite relevance, I think, to everybody in this room, whether they realize it or not. Just by way of introduction, I'm David Packham. I'm the founder and CEO of Chintai. We're a digital asset service provider based out of Singapore, and I have a banking career, both buy and sell side. I started out for Merrill Lynch in 2001, so a while ago now. Moved across to Goldman Sachs, Credit Suisse, and a number of others before I moved into the buy side as well. So it's definitely fair to say I've got a reasonable understanding of the financial services sector as well as its kind of ongoing challenges. But really then beyond that, I launched Chintai in 2018 to provide a series of solutions that can really fundamentally, hopefully, improve how we actually can provide services to clients. And that particular, I think, as you'll see when we delve into this, is of relevance to the younger generation of people who we really need to work to attract. It's easy to appeal to the older generations right now with the existing products, but there's, I think, real interest in digital assets as it pertains to the future. So in terms of kicking off this presentation, a little bit about the company. As I mentioned, 2018 we kicked off, and we're headquartered in Singapore, where as of 3 weeks ago I'm now resident myself. Our development hub is in Frankfurt, Germany as well. We're really providing something called blockchain as a service, as a platform, and we'll come into a bit more detail as to what some of that means in practical terms. But we're fundamentally designed from the ground up to enable the automation of compliance, which is such a fundamental thing for the industry, where we've got reputations and we're dealing in assets that we need to maintain the highest standards for. And that's been a big problem generally for this digitization of assets, has been how do we actually handle compliance properly. Now, the underlying purpose of this, therefore, is to empower financial institutions to really give them the ability to handle different types of tokenization and issuance of digital assets. And outside of that, we've just got indicative licensing for the capital market service license, and we're hoping to also get the RMO as well, shortly as well. Now, in terms of what you may have heard already, digital assets there are actually multiple types of digital assets. And what that means is that there are different ways of representing the different products that we actually have out there. You've got security tokens that handle things like debt, commodities, and other types of assets. Utility tokens, you may have heard of this NFT scene and wonder what some of those are. Other examples would be they provide things like access to networks. They can also have digital content ownership rights. And then we've got digital payment tokens that are, I think, more familiar. They're going to be things like currency and exchange of values, as well as Bitcoin. At a high level, though, this tokenization process, what does it mean? It really is a way for fractionalization of different assets and enabling them to really efficiently be exchanged between ourselves. Now, if you think about how we currently do this, we're packaging things up through banks and other restricted parties that can charge very high amounts. And it's actually quite a restrictive process that prices out what we can actually exchange, how we can package it together. And generally, the reason there's so much hype around blockchain as a technology is that it's a vastly more efficient way for the industry to actually interact. It provides a range of different ways upon which we can do that. So the types of things that can be tokenized: digital payment tokens, tangible and financial products. So gold is a good example. Real estate we'll come on to, as it's one of our big ones. It can include intangibles like copyrights, royalties, intellectual property, and really tokenized assets in general, the traditional types. So big examples of this would include things like Paxos with gold. We've got Overstock for securities, and a range of banks are doing different forms of packaged debt already. The growth rates that we're seeing from this are substantial. Now, I would probably say on a cautionary note that they're high growth rates based on obviously initiation of markets, so that I wouldn't get over caught up in those figures, but we are seeing some very, very strong growth in this area across the industry. But as to why, I mean, ultimately, the tokenization of these different assets, it provides ways to remove custody fees, decrease the minimum purchase amounts that are required. Instant settlement is something that, as a concept for the industry, should be music to the ears of many. And it generally enables, in theory, us to be able to provide a range of products to investors that have really never been possible before. And if you think about one of the core challenges as an industry in wealth management and so on, one of the big challenges we have is how do we actually shape products that are going to inspire the next generation and potentially offer something that gives us a competitive advantage, maybe creates new markets, adds new revenue. We've actually completed a study with Hubbis, which I would encourage you to go to their website. The adoption of digital assets and tokenization among high net worth and ultras as clients. It's a free to download report which gives you a lot of information around the industry trends. And I think it's very powerful for showing some of those. I'll just touch on a few of the insights here for you. In terms of are banks and asset managers at the moment considering whether or not to start promoting digital assets to their clients, whether or not the people in this room right now are considering that, 88% of the industry at present are considering it. So this is something that's coming for the industry, whether we're ready for it or not, and therefore that certainly makes it of relevance. The level of understanding, though, of the clients and expertise of their financial advisors, I think it's fair to say right now that one of the big barriers right now is that there's a lack of understanding of digital assets. It's very, very easy to sort of look at some of the things you'll see in the press and dismiss them, but actually they offer some really interesting opportunities with things like the ability to take an asset class like real estate, fractionalize it, break it down, turn it into a liquid market that's as tradable as shares. That's just one of many examples where you can fundamentally disrupt how we, actually exchange value in a given asset class. So who are the most suitable types of individuals for this? It is typically going to be those with good amounts of working capital who are prepared for that exposure. Generally, though, high net worth and ultra high net worth individuals typically are looking for that type of high risk return exposure in their portfolios. This is why we're seeing in the press so many billionaires, for example, taking exposure to Bitcoin, because although it's been an interesting year generally in the sector, there is, I think, widely acknowledged to be amongst these groups that there is upside potential that for them makes it a worthwhile hedge to mere fiat and other types of exposure. But really then, other than that, this sort of goes back to it, what are the main motivations here? It's primarily capital gains and high returns for most of them and an element of diversification. And what this final slide here really is showing is, although right now the interest generally across investors is in this cryptocurrency area you hear about, what we're going to see over the next 1 to 3 years is a really dramatic shift towards interest in regulated digital assets, security tokens, and tokenization of funds. So what does that practically mean? It means a series of opportunities really for wealth managers, for anybody running a fund, a family office in this room who is considering, is this an area that I should be looking into? Well, some of these advantages I think are profound. It provides new ways of actually fundraising, which is a really important factor that needs to be considered whenever you're looking at ways of raising capital and providing exit liquidity as well. The transparency and efficiency side is probably less of interest to this particular group, but is huge for the banking industry generally. The ability to have a single source of golden truth across the trade life cycle is massive. It provides ways of cutting out the back office and adding efficiency there. But it actually, in theory, enables us to actually create new markets with programmability. So when we get onto these types of new products that you could structure, you might end up having a conversation with, say, a particularly wealthy client base and realize they have a specific set of needs that you don't have any product that really fits that. You could actually tailor something absolutely bespoke for them and deploy it as a product. In other words, it's something like a structured product that we see in banking right now, which are very hard to do, but with tokenization, it's something that can be broken down and will become an accessible type of bespoke product for many. There are, though, definitely a range of challenges in this area too. The regulatory framework is continuously evolving, and therefore that's been, I think, one of the biggest barriers to adoption generally. The legal and compliance side is also something that I think has been very tough for adoption, both by banks, asset managers, and others. And really, there's been a need for a really robust risk framework that's built into the technology. So then I'll come on to telling you a little bit about what we're doing and therefore why I feel it's relevant, and we've been talking about some of this. How do we actually enable services for wealth managers? Effectively, we are there to be a service provider and partner for companies from the largest banks down to the smallest entrepreneurs in these sectors, as well as wealth managers. And we're able to enable modular services that they can use and pick and choose as they wish. It can be used for issuance services, which can then go out and actually conduct the equivalent of a security token offering, an IPO. But rather than being priced out in the exclusive reserve of companies over a certain scale, it becomes much cheaper and more accessible, and something that can be done as an ongoing service that could build out a new business line. Secondary listings are a really important aspect of this too, and one of the big innovations that have come out of the digital asset space is a concept called automated market making, which, for those not familiar, it enables the markets to operate automatically. So you can actually have a sale without a buyer on the other side. They algorithmically rebalance the underlying pricing based on supply and demand. Now, these types of opportunities are definitely innovative and interesting, but again, what they do is they provide ways for asset managers in particular to actually explore potentially growing out whole new business areas that they've not had exposure to before. And with new business areas, of course, come new opportunities, revenue streams, margin, and so on. And outside of that, then other things can be added in as well. The compliance framework that I've sort of talked about, we have the Sentinel AI module, which has advanced transaction monitoring. It's effectively an on-chain rules engine that enables this to be automatically enforced per asset class across the different jurisdictions. And outside of that, we have robust cap table management as well. And really, I think I won't go into too much detail on this, but broadly, I would just say that in terms of how we can enable different products, we've touched on some of them already. We're built to handle, with our licensing, the likes of equities, bonds, real estate, different types of collectibles, commodities, and particularly different types of funds. And SPVs and these VCC structures too are something we're doing quite a lot of work with as well. Ultimately, we're there to therefore provide a means by which people are going to be able to get different forms of issuance and secondary listing access on their own terms. They can do directly with us, they could use different components, or they can just take that entire product and shape it as their own new product that they want to face out to. And I think just to sort of finish off, we will be publishing out a white paper on digital asset tokenization in June. So if you want to take a note of this QR code, we'll be able to send you a link to download that when it's available in about a month's time. And yeah, I think other than that, thank you. And if anybody's got any questions, I'll be happy to take them either now or at the end. Thank you.